I've got a super exciting video for you today. We're going to talk about car insurance. More importantly though, we're going to talk about the things that affect your car insurance, how it's rated, and how you could possibly make sure you're getting a good deal. Okay, I think you'll be really interested by some of this, and I think everybody watching this is going to learn one thing from it at least. So please keep watching. Right, firstly, I'm not giving you any insurance advice in this video, and if there's anything that seems like advice, it's not. You can only get insurance advice from an FCA approved insurance broker or advisor. I'm not speaking to you in that capacity whatsoever. So if you want proper insurance advice, speak to an FCA authorised insurance broker. Just a quick reminder to give the video a thumbs up, and don't forget to subscribe. Thanks. Right, so lots and lots of factors affect how your insurance is rated, and I'm going to tell you all this, and one of the main things is that you always tell the truth. Vitally important, because if you don't, you will be found out if something goes wrong. Believe me. Right, first one's your postcode, where you live. Lots of different factors around this, but the main ones are the crime in the area and the amount of traffic and population there, and the number of accidents that happen in that area. So you could say, like inner city London or Birmingham, you're going to be much more likely to have a car accident than you are if you live out in the sticks somewhere, simply because there are loads more people and loads more traffic. There's nothing much you can do about that. Don't lie about where you live. It is a major rating factor and it does get checked. So don't tell someone you live in the country when you live in Birmingham, because if you have a car accident, you don't want to find out at that point that A, you're not covered, B, your insurance is invalidated, so C, you might get done for driving with no insurance, which means a big fine and 6 points on your licence. Next, personal characteristics. So things like your age make a difference. Obviously really young drivers are seen to be high risk, and also very old drivers are seen to be high risk. And then different insurance companies have different sort of appetites for different age groups. So I'm now 43. 43-year-old is reasonably attractive to most insurance companies. You know, I've got rid of all that testosterone, haven't I, as a younger man, stopped driving around like an absolute loon, and possibly I'm a bit of a safer bet than someone who passed the test 3 months ago and, you know, is 17 years old or something. Your credit score as well also comes into it. Most insurance companies now run credit checks against their policyholders or potential policyholders, and they're doing that to try and give you almost like a moral rating. If you've got a really poor credit score, you might be more likely to try and commit some kind of insurance fraud. You might be a higher risk individual for them in some way. That's not to say that's the case. You know, you could have a terrible credit score and be an absolutely fantastic driver and a good insurance risk. You know, they will use data sets based against, well, in this category, this many people had a claim versus in this category where this many people had a claim. But credit score is a factor with a lot of insurance companies. Likewise, if you've just moved house, sometimes your credit score's negatively affected because you've literally just moved house and you're not appearing on the electoral roll yet. Some insurance companies won't quote for you, or they might quote a higher premium as a result of it. So that's something to bear in mind. Right, the way you use the car, so your annual mileage has quite a big effect. If you say you do a low mileage, the insurance company might put a mileage restriction on your policy, so you need to check that. And again, don't lie, be honest. If you normally do 7,000 miles a year, tell them you do 8 or something, in case they put an 8,000 mile cap on. And if you look like you're going to go over that, sort of 10 months in, give them a call and let them know. You've probably also heard about black box technology. This is where you have a little device in the car, an insurance company can track your driving style, the hours you typically use the car, and, you know, if you're speeding and all that kind of stuff. If you agree to have one of those and you abide by the rules, that can save you a few quid, but again, you have to abide by the rules. And then what you're using the car for. If you literally use it for social use and you go to one fixed place of work, so you go to the same office every day, you ask for social, domestic, pleasure and commuting use. If you don't commute to work, don't use it for any kind of business use, it's social, domestic and pleasure only. And then you've got class 1 business use, which is where you may go to different places of work. So say you go to 2 or 3 different offices potentially, and pre-booked appointments. So if you're a travelling salesman turning up at, you know, carpet showrooms every day with your samples, that's not going to be covered under class 1 business use because you're just arriving at places. But if you go to the London office one day and the Birmingham office the next of your company or whatever, then it would usually come under class 1 business use. Get advice from a broker if you need any kind of clarification about any of these points. And then where the car's stored overnight is also a big factor. So they'll usually ask you for the postcode where it's kept overnight, which would usually be your home address, wouldn't it? And then whether it's kept on the street or in a garage or on your drive. Usually if the car's in a garage, the insurance company might put a garaging clause on there to say whilst it's at the home address between these hours they expect it to be kept in a garage. And then the next thing of course is the car, so they're going to look at things like the age of the car, but also combined with things like the make, model, the engine size, the potential cost of repairing that car, how attractive that car might be to thieves, how fast the car is. All these things are factors when it comes to giving the car an insurance group. And of course also the value of the car might come into effect. Something a lot of people do, they say, oh, my car's worth £30,000, and then it gets written off and they get offered 10 or something. Quite often they give the person says it's worth £30,000 because that's the price it was new. Well, they've got a 3-year-old one with 60,000 miles on it. You're going to get market value, which is generally trade price, okay? That's what the insurance companies usually give for write-offs. Next is your driving experience. So how many years have you been driving? Have you got a full licence? Have you got any points on your licence? Have you had any accidents? Anything like that? And be honest, the amount of people that don't declare things like speeding convictions or driving without insurance convictions, they can result in your insurance being invalidated. If you get that, you're getting more points from the police. You must be honest with these things. Everything is checked. Be as honest as possible. If you're in like the Institute of Advanced Motorists or whatever it is, also let the insurance company know that. Actually, if you've done an advanced driving qualification, they might give you a reduction for that because you're seen as a better risk to them. And then also, who's the main driver of the car? This is another one where people sometimes come unstuck. They'll have 2 cars and the second one is, for their son or daughter, and they'll say that they're the main driver on it to try and get the premium down. Well, if you've got a 2-year-old BMW 5 Series and a 10-year-old VW Up, and you say you're the main driver on both, but the VW Up happens to have your 17-year-old son or daughter on, the insurance company will smell a rat on that if it comes to a claim. And realistically, you're not the main driver on that VW Up. A son or daughter is, so always declare it properly. And then you've got some of the little add-on covers, things like protection on your no claims discount. I think it's a thing you definitely need to have, because if you do have an accident doesn't always have to be your fault for you to lose your no claims discount. If you have an accident or the car's stolen or something and a recovery can't be made by your insurance company, i.e. someone drives into the back of you and drives off, or they hit you in a car park, it's not your fault. But as far as your no claims discount goes, it's a fault accident. It's a fault claim because they can't recover the money from anyone else. So bear that in mind. I think protection on your no claims discount's well worth it, because if you lose it, it takes years to build it back up and you're paying a lot extra in the meantime. Then there's stuff like uninsured loss recovery or legal expenses cover, as it's sometimes known. You can shop around separately from that. You don't have to buy it with your insurance. I would strongly recommend everyone has that, because that can get you a lot of money. All right, that can be more valuable to you than your main insurance policy if you have an accident, because that can get you a courtesy car. You might be able to pursue an injury claim if an injury's happened in the accident. Lots and lots of things that, in my mind, make that quite a good value little add-on, especially when you compare the price you pay for that to the price you pay for your car insurance. A few things to look out for. The comparison sites don't always have the best price. They often do, but not always. So bear that in mind. And also, not everybody is on the comparison sites. Comparison sites charge the insurance companies and brokers a lot of money if they write a piece of business through that site. So not all of them go on there, and some of the ones that are on there charge a higher premium. And also, they do look out for what they call quote manipulation. So that's where someone's gone on and got a quote, and then they go back and keep changing little details. Oh, we'll take these 3 points off, we'll do this, we'll do this. All of that is logged. So if you're going on there and changing the quote to get a cheaper price, that's all logged. A lot of the companies now have things built into their algorithm, so if quote manipulation happens, they either won't quote on another system, or they quote a higher rate, or they'll call you afterwards and ask you to verify all that. So they've got a recorded phone call of you verifying that information's correct. It doesn't work in your favour, changing things. Give them the truth the first time and leave it at that. And then admin fees. You want to know about the broker admin fees because it's really important. They might have the cheapest quote on day one, but in 6 months, maybe you're going to move house or change your car, or you need to cancel the policy or something. They might charge you a 50 quid admin fee. The insurance company might not be charging you anything, but the broker might charge you an admin fee. So you really need to understand all the fees that come along with that policy, because although you're buying it today, you're going to have that for a year or 2 years or 3 years, however long you're with them, and you really want to understand their fees, because otherwise that cheap policy you bought can become very expensive in the long run. Hope you're enjoying this one, guys. Please give it a thumbs up. Thanks. I'm not going to give you links to go to different insurance companies and stuff, because I don't want to give anyone actual insurance advice. I want to have a little chat about roughly how it works, in my opinion, and the things to look out for and things to be wary of. Because I think with insurance, people get so focused on getting the best price that they forget what happens if they don't get paid out or their policy gets invalidated. So the important thing is to focus on getting the right cover. Once you've done that, then try and get the right cover at the best price. But don't let yourself buy something and then find you're not covered, because if you save 50 quid on something and it's worthless if something goes wrong, it's not much for saving, is it really? If you want insurance advice, speak to an insurance broker. I'm not talking to you in that capacity at all. I'm talking to you as a bloke in the pub, has an opinion on one or two things. All right, nothing more, nothing less. I hope you liked that video. Please give it a thumbs up and please subscribe if you haven't already done so. Lots of car content on this channel and I think you might like it. Over here is a video that YouTube really strongly thinks that you're going to like. So I think you should watch that now because it's going to blow your mind. Thanks.